Hi, this is Listen Up Homebuyers. I'm Victoria Ray Henderson. And with me is Ramez Fahmy with First Heritage Mortgage. Ramez, you were the first person I thought of when President Trump announced late Thursday that we were going to see some plans to direct Fannie Mae and Freddie Mac to buy $200 billion in mortgage-backed securities. I know the effort or the hope is that it will bring down mortgage rates. So explain to me what this means, because I'm seeing economists having different opinions about the impact of this.
Sure. Yeah. This effort is what they call quantitative easing, right? This is basically when, in this case, Fannie Mae and Freddie Mac go out and sort of buy loans on the market, basically creating demand, which basically increases the prices of these bonds and ultimately lowering interest rates, sort of artificially. It's something similar to what the administrations did during the time of COVID, but at a
Right.
much greater extent than today.
Okay. Okay. Now, the immediate thing that I have been reading is everyone's excited because it says interest rates are going to drop. Um, my concern is that we are just in the last few months seeing a market that was leveling out a little bit more.
Yeah.
Talk a little bit about that, because if the interest rates drop, that means more buyers. But if our housing inventory is still low, that's just going to increase that competition and inevitably the price of homes.
Yeah. So, what they're trying to do is, and I've heard the term thread the needle, right? It's like, give the market enough of a boost as far as, interest rates coming down to take care of a couple of issues that are out there. One is there's what's called this lock effect that's out there right now. So all the people who did loans in, 2020, 21, early 22, who have these sort of, 3%
Yeah.
rates, right? Many of those people have sort of kept from putting their houses on the market and making the next move because there is such
Mhm.
a gap between, the interest rate that they have now and what they would potentially be going to, right?
Mhm.
So, this lowering of rates not only impacts people who are looking to buy homes, but people who maybe got a loan. And, I'm talking to people even tomorrow that I did their loan for them a year ago and they're at 7%,
Mm.
right? And now they're kind of considering, hey, you know what? I can refinance my loan at 6%, and that saves that person maybe four, five, $600 a month, right? So that kind of
Wow. That's a
helps
lot.
helps the, the person who's even already in a home
Mhm.
kind of create more cash and kind of help, kind of with the economy. But for the person who's buying, right, um, while, inventories are, and depending on the area where you are, sort of nationally, I think inventories are up a little bit. Um, in the DC metro area where we are, there are pockets where inventory is up, but then there's also, a house goes on the market,
Mhm.
today, and,
Mhm.
you got 20 people looking to buy the same house. So
Mhm.
it's kind of very much, it can be different in sort of different areas of the country. But yeah, they would like to see interest rates, you're not going to see them down in the 3-4%
Yeah.
range
Right.
anytime soon. I think they would like to kind of see them sort of settle here in sort of a middle to upper 5% range. And
Right.
they believe that that number will sort of create enough interest where people come off the sidelines, but not too much interest where we see prices sort of escalate like they did in 20 and 21.
And I realize that this is a big ask because this whole situation reminds me of, have you ever tried to pull a blind up and it's one of those blinds that has about 6 different strings on it, and
Yeah.
so it goes up a little bit, goes down a little bit, and you're trying to figure out which string to pull to make sure that it
Yeah.
goes up evenly.
Yeah.
That's my analogy for me trying to wrap my head around all the different ways that the economy in general and things like, mortgage-backed securities and the mortgage rates, how all of this kind of relates. Can you kind of explain that a little bit more to help
Yeah.
us better understand what all of it means and how it's related?
Yeah, so there's so many factors that kind of can impact mortgage interest rates, housing. I would say the biggest items are one, inflation, right? Inflation is like is a killer for, the mortgage market, the real estate market, right? Because inflation
Mhm.
means higher home prices, right?
Right,
And higher interest rates,
right.
right? Um, so that's a big one. Employment, right? The employment, it's sort of when you think about it, and no one wants to see people unemployed, right? But when unemployment is higher,
Yeah,
interest rates tend to come down, right?
yeah.
So there's all these sort of tools that that the federal government and the Federal Reserve have to try to sort of, like you say, blinds and trying to find that sweet spot, right?
Mhm.
So it can be very frustrating to a consumer,
Right.
as to, okay, when's the right time, right? So
Yeah.
the consumer who says, hey, look, I want to wait for interest rates to come down,
Mhm.
right? You hear that from a lot of people, which isn't really a great strategy, right?
Mhm. Mhm.
Because if you're going to sit around and wait for a year for interest rates to come down,
Right.
and we know that even, all the projections are 3 to 4% appreciation, right?
Right.
Next year. Well, if you buy a $500,000 home and now that house is, 40, 50 grand more at the end of the year,
Right.
waiting for that interest rate to come down didn't really help you,
Didn't pay
right?
off.
We
Right.
we are seeing interest rates today at the lowest rates they've been since like 2024,
Mhm.
right?
Mhm.
Inventories in certain pockets are up a little bit.
Mhm.
A report that just came out last week is, rents are stable to down.
Yeah.
They're trying to get, all these things, including housing, right? What you're paying for
Mhm.
rent or your
Mhm.
mortgage impact, the economy and inflation and those sort of things. So, buying a house today when
Mhm.
maybe a lot of people aren't looking, it's the beginning of the year, it's not
Mhm.
quite the spring market. If you can find the right house, it's a great opportunity to buy, right?
Yeah.
You're
Yeah.
not like clamoring after this house, like with 20 other people
Exactly.
who are looking to
Exactly.
buy. If you bought now,
Mhm.
right, and you believe what might happen in that, you're going to see this 3 to 4% appreciation, great. But if you think rates are going to come down, there's always the opportunity to refinance these loans,
Yeah.
right? So like those folks that we did the loans for last year, right?
Mhm. Mhm.
Houses appreciated 4 to 5% in this past year. Those people are going to come today and call me, and we're going to reduce their interest rate by
Good.
1%,
That's
and
great.
their house is still worth more. And now I'm going to get
Mhm.
their payment down by $3, $4, $500, depending on what
Yeah,
amount
that's
it is that they
huge.
borrowed.
I
Yeah,
mean,
so
that's a lot of money in their pocket,
it
every
is.
single month.
Stats out there that say that a person who owns a home
Mhm.
typically has wealth
Wealth.
through appreciation and through principal paydown.
Yeah. Yeah.
Yeah.
I I have a couple of thoughts, and I'd love your take on this.
Sure.
I did have several clients last year buy new construction, and until we can see more new construction and more housing in that area, we're still going to see some competition. And I've had success this winter where if a house has been sitting on the market for a little while longer, maybe priced too high, or maybe it needs a little cosmetic fixing up, that's the one that you want to go for because you'll have
Yeah.
more negotiating power.
Yeah.
In my opinion, those are the ones that are still available right now. Whereas as we move into the spring, if you go after that bright, shiny house with the white kitchen cabinets and the white granite countertops,
Yeah.
you're going to be competing with other people. Nobody can forecast the future, but that's my take on that. Now what are your thoughts as you would advise home buyers right now, looking at what's coming up?
Oh, for sure. And I think we've seen it on transactions that you and I have worked on together, as well
Mhm.
as sort of lots of other customers who are out there. We are definitely seeing more of a fall through in contracts
Mhm.
because buyers have gotten very picky.
Yeah.
It's funny, 2 years ago or 3 years ago, a buyer had zero leverage, right? They
Mhm.
basically had to,
Mhm.
had to basically sell their soul to get a house,
Mhm.
waiving inspections, waiving
Yeah. Which
financing.
we don't advise, by the way.
Yeah, which we don't, and they were competing against these cash offers. So it was the person who didn't have a whole lot of money to put down really was sort of at a huge disadvantage.
Yeah.
Now today, the tables have turned a little bit in that, and like you said,
Yeah.
if you can find a house, there are plenty of ways to get into that house and maybe even put a little bit less money down and use some of the
Mhm.
cash that you're going to put for a down payment to sort of spruce the house up and
Yeah.
make it yours and make it what you want it to be. There was another thing that kind of came out from the administration last week. There's these institutions who were going in and buying a tremendous amount
Yes.
of homes,
I'm
right?
glad you brought this up. I
Yeah.
wanna get your opinion of this nationally and then locally for, our greater Washington, DC, Baltimore area, but go ahead.
Yeah. So, real estate is an investment, right? Just like, investing in the stock market and things like that. And, you know, the US, real estate market is a huge and relatively safe investment when you compare it to, all the other sort
Mhm.
of speculative type of investments that people make. And so many of these institutional buyers would go into a builder and they say, hey, look, we're going to buy up, we want 50 of your homes,
The new homes, yeah.
the new homes, right?
Mhm. Mhm.
You can put in all the standard stuff, right? And then we're going to
Mhm.
just turn these into rentals, right?
Yep.
Well, they made it a lot easier for a builder to sell a house than to sell a house to a family
Mhm.
or a household, right?
Mhm.
And then those things just basically turn into to rental properties, and
Mhm.
they would watch them appreciate and then turn around and sell them at some point in the future. So there is talk about sort of limiting this sort of institutional buying,
Right.
which would open up sort of more house availability for, for individual families to buy
2
homes.
questions for you.
Yeah.
This past year helped several people buy brand new construction. One of the things with new construction is they do have limits in some neighborhoods that they're building as to how many of those can be rentals. When I was sitting in the meeting with the new construction builder, I said, "Oh, well, this must apply then to the advantage for home buyers, individual buyers, because those big companies can't
Right.
come in and snatch up all this new construction."
Yeah.
Do you have any thoughts on that?
Yeah, so typically these sort of limitations more come into play with condominiums versus
Okay.
like single family homes,
Uh-huh.
because with condominiums and, not to get too sort of into the minutia of it, but like Fannie Mae and Freddie Mac have certain limitations when someone is buying in a project.
Right.
What are the owner occupants versus the investor concentrations? And that can impact, ability to lend down the road even on these homes possibly. Whereas on single family homes, it's not as much. And
Yeah.
these builders offer sort of all kinds of incentives for folks to buy homes, right? They're giving closing cost
Mhm.
incentives. In some cases, there are what are called forward commitments, different things like that to kind of incentivize a buyer to buy a house, right?
Yeah.
Everyone's,
Yeah.
trying to benefit from the real estate market, on the buy side and the sell side, more or
Yeah.
less.
Touching on this topic of having these big investors, buying up real estate. The headline reads, I believe I read one statistic that said it was 1 out of every 3 homes. And I apologize, I can't quote where that source was. In my experience, as I am every single day going on to Bright MLS, pulling up listings and looking to see who is selling a property, I'm not seeing that. Is that because it isn't happening so much here in the greater Washington, D.C., Baltimore area?
Y maybe, and once again, I can't say that for certain. I
Right.
haven't seen a lot of it in this area.
Yeah.
I would think maybe sort of in sort of lower priced housing markets,
Got it.
that's happening, Midwest, sort of South, that sort of thing.
Yeah.
We're on the coasts here where, housing, whether it be in California or in
Mhm.
Washington, DC, where
Right.
housing prices are definitely higher than they are sort of in the middle of the country.
Sure. Sure.
So I haven't seen a lot of it. I've seen a little, but not much where someone said, "Hey, I
Yeah.
couldn't buy that house because I lost it to, BlackRock or something like
Yeah.
that."
Yeah. I remember years ago when everyone was anticipating a foreclosure crisis, taking classes, continuing education, and they were saying, oh, we're going to be working on these foreclosures. We didn't see that happen here. And yet, when I read headlines, it was happening in cities in Nevada.
I think the big difference today versus in 2008 was supply, right? There
Yeah,
was an oversupply of homes back then because there was all kinds of financing that basically,
fell
you
apart.
basically had to have a heartbeat in order to qualify for a mortgage,
Right.
where now the lending standards are higher, right? And the supply is, you know, we see it every day, a
Hmm.
shortage of supply. It's
Hmm.
improving, but
Hmm.
back in 2008, builders kind of
Yeah.
overbuilt, right? There's all kinds of financing out there that basically got people in trouble.
Hmm.
And and that's what kind of caused the reduction in sales prices, right? People who were also kind of losing their jobs, and it was like kind of the
Yeah.
perfect storm.
It was terrible, terrible
Yeah.
time.
If you're interested in buying a house in 2026, I think you should connect with, good, reputable sources, get good information, and make
Hmm.
a wise financial decision. Don't leave your decision to buy a house from research only on the internet and
Yeah.
just kind of reaching out to sort of people who don't know the market. It's a great time to buy now, but you need to make an informed decision.
Yeah.
And don't overspend. I always tell people when I talk to them initially, I was, what are you interested in paying versus what are you qualified for? I tell people you don't want to be resentful of your home because
Hmm.
that's all you can do. You bought the house. Now I can't go out to dinner. I can't take a vacation with my family. You want to put yourself in a comfortable position for you in the right place. Don't way underspend because then you may also be kind of in a year from now kicking yourself saying, I should have bought a little bit more.
Yeah.
You know, There's a sweet spot. So there is still some of that, and then there
Yeah.
are certain spots where you can get good financing. We have a transaction right now that we're working on for
Right.
someone who they got a house sort of a little bit below market, right? The house appraised for $25,000 higher than the sales price,
Yep.
and they also got a seller contribution.
Yep.
So, and they were using a type of financing, VA financing, which is the unbelievable benefit
Yeah.
to our veterans who have served. It's working out, very nicely for the customer. So
It's so fun when
yeah,
it comes together like that, right?
yeah, for sure.
Ramez Fahmy is with First Heritage Mortgage, and always a pleasure to have you as a guest on Listen Up Homebuyers. Thank you so much, Ramez.
Thank you, Vic, for having me on, as always.